Let's say you go to Vegas and you are at a game table. Now think about it. Who would you bet on? A single player playing a single game, making a single bet, or the casino? You're probably going to say the casino. As the saying goes, the house always wins. You would be wise to bet on the casino, making money quietly and consistently in the background. Meanwhile, a tiny fraction of the time, some gamblers win money and everyone gets excited. Most of the time, gamblers lose money and they don't want to talk about it, so they're quiet. And there's a lot of people in the middle who don't win or lose that much, and it's just entertainment value. The same thing happens in investing. People who trade individual stocks are essentially gambling. They are betting on a single stock to do well. So how do you approach investing like you are the house, the casino? Well, it's very simple. You could do that through index investing. An index is basically a list, like an index card, of different companies and stocks. And what has been statistically proven to be true is that people who invest in stock market indexes, basically a basket of stocks, they do better. They are able to get the market return of about 8 to 10% year after year. For example, the S&P 500 index is an index that tracks the top 500 publicly traded companies in the US. There's other indexes like the Russell 1000 or the Total Stock Market Index, which buys all the 4,000 or so stocks in one go. This is how you play like the house. You're buying the stock market instead of playing a single stock. Now, when you are acting like the house, like the casino, when you buy the stock market, the fluctuations aren't going to be as high as buying a single stock. Because a single stock, it's not diversified, there's a lot of risk. What if there's one news article that comes out that's bad about that stock? You could see it tank. Or maybe you'll see it shoot up. It's very volatile, but when you spread your risk across the entire stock market, it's more diversified and a little bit more predictable over time. People mix up investing with trading because trading is the more exciting game, kind of like how gamblers approach the casino. They get caught up in the story of a certain company. They get promises of a stock going 10x or to the moon. They'll read a news article or a YouTube video of someone pumping up a stock, saying it's the next stock that'll make you wealthy. So they buy the stock, and this is when the problem starts. Because how do you know what to do next? Maybe the stock goes up a little bit. Is that the time to sell? How much higher does it need to go for you to feel like you've made the money to sell it? What if the stock goes down? Do you keep holding on to it? What if it keeps going down to zero? Should you just count it as a loss? At what price is right to sell? And also, there's news about that certain company. Certain news articles are going to be pumping up the stock. Certain ones are going to be shorting it, being against that stock. And how do you know which information source to use? If this sounds like a lot of work, then you're right. A lot of people actually want passive income through investing, but they end up taking a very active approach to it by trading stocks. If you want your wealth to grow passively without much of your work, then the way to do it is to set it and forget it with stock-based index funds, which spreads your bets across hundreds, if not thousands, of stocks within the stock market versus riding that wave like a gambler on a single stock. So this is the big difference between investing and trading, between a long-term approach to wealth versus gambling your wealth away. Now, are there exceptions to people who trade and make money? Of course, but a lot of research shows that most people, even professionals, day traders and fund managers, do not beat the market, meaning they don't even beat just this simple index that just tracks what the stock market is doing. So if you're a believer in statistics and you are someone who just wants to quietly stack their chips without playing the emotional game of trading stocks, then I hope this video was a benefit to you. I hope that it saves you a lot of money and stress over time. I'm Oz Chen, and I help you mind your money.